Markets. Die Stummschaltung ist aufgehoben.
Good morning, traders. Let me show my screen and let's rock and roll. And thank you very much for the high attendance. It is awesome. Where can I show my screen? Why is it not doing it? Yes, I'd like to show my screen and I'd like to show number 4. Are we showing number 4? What's going on today? Tiny view. Yeah, no, wrong screen. Hang on a second. Why are you showing 3? I want to show 4. Here we go. All right. Here we go. Good morning. Okay.
4 screens you have, or how many screens you use?
I got 8. I got 8. I need 2 more. In the bank, the more screens you have, the more important you are. So it doesn't matter what car you drive. It's all about the number of screens. It's ridiculous, really, when you think about it. But ego everywhere. Okay, trade from last week. We were looking to short cable. I know it was a different chart from usually, and it looks messy. My brain actually realizes what's going on there. You don't have to. I got a cleaner chart for you all again this week. And max was 226 pips. So we shorted right here. That was our level at 129.5. It went against us, and check this out. The stop loss was at 130.75 and the high was 130.72.1. So I'm teaching my traders to usually put the stop loss at an ending in a 3 or a 7 and to keep the bid offer spread in mind. Nevertheless, we hit into a daily level, and then my traders know what to do. And we saw pin absorption, meaning passive buy limit orders absorbing the aggressive sell market orders, and then a turnaround. All good. This was the 4th consecutive week that we made profit. So all I can advise you to do is stop wasting your time learning about strictly only technical analysis. That comes last. 5% is chart work. That's why I'm late every Monday morning, because it takes me 3.5 seconds to look at a chart. I don't spend any time in the chart. I spend tons of time researching economic data, grasping the picture. And I had a very long call with my co-instructor last night, because we grasp the macro picture that the dollar is getting sold off. The big boys, the tankers, are repositioning. They're getting off their dollar longs. And that's why you're seeing euro rallying, the pound recovering. You see the antipodents, Aussie, Kiwi rallying. And if oil recovers, we're going to see Canadian dollar seeing some strength this week again. And that's all due to the fact that the equity market is coming off, and that the implied probability of a future rate hike in the amount that the Fed told us they were going to hike in 2019 is being priced out of the market. So this information alone is worth millions. Okay, if you understand that, you can make money. Greetings to all my girls and gals and boys over at the bank and at the funds. Be careful with your dollar long right now. It's getting priced out. This morning, we have slightly risk-on sentiment. What's the problem? The problem is that U.S. and China trade war, Pence versus Xi. Pence is being really aggressive. Trump and Pence are playing good cop, bad cop, and Pence is being the bad cop right now. So verbally, the war is heating up again. And then we had the Asia Pacific Economic Council, and for the first time in history, they couldn't come up with a joint communique at the end. Why? Because of the US-China trade war. We are seeing global trade growth coming off a little bit due to the trade war. Asia, we saw Sydney getting hit a little bit. Only the miners over in Sydney were green. Everything else came off. We saw a slight increase in yen, in the Nikkei, and then Shanghai and Hang Seng due to policy support. Government is, I keep saying that every Monday. Sorry, guys, but it is what it is. So now we're seeing some hedge funds moving into bombed out Chinese equities. Wouldn't be my preferred market to play in because I don't like the data. It's not dependable to me. There's enough other markets to make money. And again, in my opinion, the easiest market to make money consistently week in, week out, week in, week out is the Forex market. It is so easy. It's embarrassing. If you're a professional trader, this is the best market to play. 42 Tory MPs not to support Prime Minister May. Please recall there's 48 needed for a no confidence vote. The no confidence vote is expected for tomorrow, but it's sort of a shot before the bow of May, because overall, you then would need 159 conservative PMs to vote against her. And 159 is a much different number than 48. So don't really expect that a no confidence vote would go through. If it were to go through, chaos is going to break out. UK business morale is at the lowest since 2009, according to HIS, and the house price index is coming off as well. So we're seeing some impact from this really, really badly handled Brexit scenario, which we always expected was going to be a clusterfuck. Excuse my French. It was always expected. Now they're talking about potentially extending the 2-year period, the grace period for another 2 years. But then another guy comes on the hood and says, no, that's not going to happen. It is horrible. It's absolutely horrible. Very, very high volatility, as we'll see in a minute, which is great for us when we're day trading, which is not so easy for us when we're swing trading. Recall last week's trade. We didn't get stopped out by 3 pips. 3 pips saved our ass, and we made 225 pips. Okay. That's how close it can get with volatility. Japan's government pension investment fund, it's the largest pension fund in the world, is now able to hedge against fluctuation in the value of various currencies. That then saw some yen strength. In the market, this GPIF is called the whale. Why? If they only shift 1% of their asset allocation, that's an equivalent size to 15 yachts. 1 billion is a yacht. $1 billion is a yard, and 1 million is a buck, or $1 in banker speak. So 15 yards for 1% shift. Unbelievable. If these guys come in and they want to buy 100 million, they spread it over 5 days, 20 million each day. In the past, it was assumed that they're not hedging their foreign currency exposure, because if they were, that would yield to yen strength, and yen strength is not really what Kuroda and his crew want. Okay, it's an export nation. The foreign asset holdings are in the amount of 68.8 trillion yen. Woo! Meaning, if they start hedging some of that, we would see some yen strength. So keep that in mind. There's a policy shift in the largest pension fund in the world. US curve, and I'm looking at the 30-year 3 months, is at 98 basis points. So a little bit of a steepening this morning. The new guys probably won't know what to do with that, my traders, and we have a lot of my traders in here, so I apologize for that. I'm mixing it up for Admiral and my guys. We do see some steepening this morning, so be careful there. Italy spread. Italy, Germany, 10 years at 3.106. That's the next nightmare that we still have on the docket. Potentially by Wednesday, if the EU were really to go down that route, and the problem is the budget and the economic growth assumptions behind the Italian budget. That's the beef that the EU has with Italy and Italy has with the EU. By Wednesday, the EU could actually go ahead and start the ECP, the excessive, what's it called? Excessive deficit punishment. I don't know. ECB. I need to look it up again what it's called. But the punishment would be in the amount of 0.2% of GDP. Horrible. In order to show the EU a peace treaty offering, Italy said they were willing to sell government assets in the amount of 1% of GDP to alleviate the fear of the EU. Not happening at the moment. So Wednesday, that's on the docket. Tuesday, potentially no confidence vote for May. Expect massive pound volatility if that happens. Pound, we're probably to sell off. It's probably not going to go through, and then the pound could rally again. And then on Italy, Wednesday, we'll have to see if the EU comes out with an ECP or not. Okay. Overnight, we saw some pound strength and we saw some Kiwi weakness. That is actually astonishing because Kiwi came out with PPI input and output numbers, which were both better than forecast. So to see some Kiwi weakness overnight is actually inherent weakness in the market, not very promising. Okay, risk events. What do we have on the docket? Be aware, not much. It's really, really not much. We have the monetary policy meeting out of Australia. I prepared a slide for that. We have the inflation report in the UK on Tuesday. Then we have the GDT price index for Kiwi on Tuesday. Wednesday, we have core durable goods orders in the States. Of course, we have crude oil inventories. That's going to be massive again. And we have the roll this week, the future roll for the oil contract. Again, that's going to be of utmost importance. Thursday, we have dollar holiday, so it's a shortened week. And then on Friday, we have a bank holiday over in Japan. We do have some flash manufacturing and services PMIs out of Europe, and then CPI and core retail sales out of Canada on Friday. And actually, they are expected to come a little bit better. I prepared a slide on that. So let's have a quick look here, guys. Follow along because it's fun to make money. Euro. What do we have? Thursday, we have the ECB monetary policy meeting account. So October meeting, really no new information. It was another snooze fest. Yes, the asset purchasing program will be wound down at the end of this year. And yes, the current policy path is to be maintained, meaning the market is expecting the first rate hike by the ECB September or slightly after September of next year. There is some talk about some LTRO to be brought back into the market. That is a program to help banks to get cheap funding on the board. And the reason where, if economic growth were to come off, and it's not a soft patch, as Draghi said on Friday, if EU growth comes off and inflation comes off again, then we have a problem. If we then see that Italy and the EU can't get their shit together, then we have a second problem. And that would lead to the problem of Italian banks, which have a tiny little bit of sum of 256 billion euros of non-performing loans on their crap books, would actually have to be refinanced. So Italian banks, the market would short the crap out of it. Yeah, the equity would fall. So that's why the ECB is already talking about a potential for helping Italian banks via this indirect refunding via LTRO. Okay, so you heard it here once more. The wording last meeting was growth outlook is broadly balanced. Okay, good. The market was worried that they would change the wording to downside risk, but the ECB still sees economic growth outlook as broadly balanced. But the focus is, again, on economic conditions failing to improve. We are coming off. Look at the GDP growth. It's coming from 0.8, beginning of 17. In the summer of 18, we're down at 0.2, okay? And the Italian situation, was there a discussion amongst members about the Italian budget situation? I'll reiterate so that you really hear it. On Friday, Draghi hit the wire and he said that the current economic slowdown has raised questions about the strength of the growth outlook. And we are seeing a temporary soft patch. Now let's look at the numbers. If they continue to come in weaker than expected, then it's not temporary. Last week, Tuesday, Wednesday, Thursday, Friday, we had weaker numbers. What did the euro do? Who can tell me what the euro dollar did last week? Freddie, I might get to your question in a little bit. What did euro dollar do last week? Come on. It rose. Thank you, guys. Here are my traders. Good. It rose. No, Nyati, it rose. So why did it rise if the economic numbers were worse than expected? What is the reason why euro dollar rose? Is it really euro strength? It's dollar weakness. Thank you, Chris. So see, my traders know this. They know, is it euro strength or is it dollar weakness? But it's euro that's actually rising on worse economic numbers means inherent strength. That's a repositioning of the big boys. That is the only viable explanation why on weaker data, the euro rising can only mean the big boys are switching their position. You got to understand that it's all about the big boys. And charts don't matter. They can only show us what price did. We need to know, okay, is the strength going to continue? Is the dollar going to continue to sell off this week? It might be likely. It might be likely. So if you want to play the euro dollar, Play it from the long side for this week. See what Monday is doing. What are the guys doing on Monday? Monday is, we all are getting into position for the trades that we expect for this week. If you have real news coverage, you know that the big boys are shorting dollar yen. That's the trade of the week. They're shorting dollar yen. So if you want to, that would make sense in terms of playing the euro dollar long. Okay. All right. I can already feel that I'm wasting too much time this morning. Sorry. Canadian dollar. Friday we have CPI. RBC, that's the largest Canadian bank, expects the CPI prices to rise not 2% month on month in October, which were to mean it's a 2.4 annual rate. The market, all other economists are looking at a 2.2 year-on-year rate. So RBC is quite optimistic there. That's why I noted it here. It's interesting. September's drop was largely due to a drop in airfares, because in July, airfare prices had spiked. Obviously, summer season, vacation, yada, yada, yada. Question is now, what do airfare prices do in October? And yes, guys, that's how deep we go into the data in the bank. Gas prices were down in October. What did the December oil contract do? The entire contract, the entire month. What did it do? Guys, what did it do? It fell. Thank you, Freddie. It fell and it fell and it fell. And I said after the roll, this whole month, we only want to sell oil. We don't want to buy oil. We only want to sell it. That was worth $11,300 per contract. One trade, sell oil, first day of the month, first day of the roll, and then hold it until Friday, $11,000 profit. That's how you trade. I don't know how much you make per month, but a lot of people in here probably don't even make $11,000 on one contract per month. Friday retail sales will be in focus. Why? Because it's expected to recover a little bit. And that's of importance because the consumer over in Canada is getting squeezed a little bit. Rates are rising, and you need to know that the Canadian households have elevated debt levels. Yeah. So if the consumer is highly indebted and the rates are rising, that means that they need to spend more of their discretionary income on servicing their interest and their debt. And that's not good. And that's, domestic demand is of importance. And U.S. economy and the U.S. economy and the Canadian economy are highly correlated. In the US, the consumer makes up 2/3 of GDP, consumer spending. It's the backbone of the domestic demand. Yeah. Whereas, for example, Germany is an export-oriented economy. We are not dependent on domestic demand like the Americans. We are highly dependent on export working well in Germany, just for explanation. All right, Aussie dollar. Last slide, so bear with me. Tuesday, monetary policy meeting minutes. We had 2 weeks ago, we had the RBA, and they left rates unchanged at 1.5. It's a long slide, but look at it. These are the themes over in Australia. Continuing global expansion. Is the global economy still expanding? Yes, but it's expanding less fast. China is slowing down. Correct. International trade uncertainty. Absolutely. Horrible wording over the weekend. Pence versus Xi. Positive business conditions. True. Household consumption is source of uncertainty. Aha. We just heard that over from Canada. So similar topic in Australia. Household consumption, a source of uncertainty. Labor market outlook positive. Abso-friggin-lutely. The employment numbers came in super strong last week. If you don't know that, you're not doing your homework. You need to know that the numbers came in better last week. Wage growth, low. Correct. That's the problem in the Western economies. We're seeing input costs rise, but we don't see wage growth rise. We see employment getting better, i.e. unemployment rates dropping like crazy, but the people are not making more money. What is the number one reason why people aren't making more money? Who can tell me? Nobody. Wow. Chris, very good. Technology. Amazon, for example. Yeah. Amazon is the largest, thank you, Dees, perfect. Amazon is the largest deflationary factor in the US economy and so globally. It's the best pricing mechanism ever for the consumer grade, in a sense, for companies bad and retail is suffering heavily. Retail means brick and mortar stores are suffering heavily due to Amazon. All right. Inflation high, where was I? Wage growth is low, gradual lift in wages growth expected, gradual, well, we'll have to see. Further gradual decline in the unemployment rate is expected, correct, similar in the States. Inflation higher in 19 and 20, highly probable due to the trade war. Input costs are rising and housing conditions in Sydney and Melbourne continue to ease. That's good. Progress toward full employment and target inflation will be gradual. Correct. Okay. Hendrik, I don't know if you're here or not. If you're reading this, he knows this. Let me see. No, yeah, he's not in here. Different Hendrik is in here. He's the head of our central bank research, and he knows all of these factors by heart. RBA upgraded its view on growth and the labor market while kept the forecast for inflation little changed. Here's a picture of inflation, GDP growth, sorry. So having said all of that, what did the Aussie dollar do last week? Look towards the left. What did the Aussie dollar do last week? It rose, obviously. Thank you, Freddie. It rose. Did it rise due to anything extraordinary in terms of data? Yes, the employment data came really better than expected, and consumer sentiment came in better than expected, but business confidence was a little off, and Conference Board leading index month on month was also a little off. So mixed data. So again, it's probable that the positioning as shown to us by the Commitment of Traders report, as well as the dollar weakness were responsible for the Aussie dollar recovery. Thank you for listening. Speaking of positioning, let's have a look at the positioning. Aussie dollar long signal triggered, Kiwi long signal triggered, and yen on its way to a long signal. Give it a few more days or weeks. We'll have to wait, but it's on its way. Okay. Volatility. Euro, boom, increased, obviously. But here we go. Pound, 14.64. Wow. Be careful with your stops. Give your trades room to run. Big volatility in the pound pairs. Yen also increased. Great. That means we're making money because volatility is in the market. Traders make money. VIX also increasing slightly. Perfect. Option pricing for this morning. What did the option guys tell us in terms of their pricing? Bullish for Monday, London session, euro dollar, cable, and euro pound. Bearish for Monday, dollar yen, Aussie dollar. Again, the big boys are playing short dollar yen. Obviously, I don't want to show you the same trade that everybody is doing, so we're not going to do dollar yen, but we have it on the radar. Option flows this morning. Bullish. Everything except the Swissy. Swissy was bearish. And then that implies bearishness for the dollar. Yeah. What's the potential trade for this week? What are you guys seeing for this week? Anyone have a great trade for this week before I show mine? Mine, once again, is highly risky because we have a shitty scenario. We don't really have a clear picture this week, so I can only run risk in order to make some money. Anyone? Dollar Swissy. VT, you love dollar Swissy. Short or long? Hang on, VT, short or long? Sell, yeah. Let's show them your trade. I like it. Where is dollar Swissy? Here. So that was a good long. That went to target. We actually know what we're talking about. Now it's coming off. It's at the roll reversal, and we do have some liquidity below here, my friend. So highly likely that they're squeezing it into this liquidity, and then it's a new decision point. Good. I like your trade. Dollar yen. Okay. Lovro, you're doing what everybody is doing. Selling dollar yen. Okay. Oil short. Change of contract. Roll. Let's wait for what the big boys are doing, Freddie. I'm with you, but let's wait. Highly probable that they're going to buy the December contract back. They've already done so. Highest liquidity is in the Jan 19 contract right now, but I want to wait for the repositioning of shorts or longs. Okay. 60 is a viable target to the upside, at which point I would look for short signals, but I need to double check. Euro New Zealand long from bottom edge. Okay, let's look at Euro New Zealand. New Zealand, we have FPI, we have manufacturing index on Thursday for New Zealand, better than expected. Okay. Euro for this week, we have a lot of negative numbers expected. So hang on, it's not a lot. We only have PPI, sorry. And for New Zealand, we have GDT on Tuesday, credit card spending and visitor arrivals on Wednesday. PPI came better. And you're saying Euro New Zealand long. I don't really want to be short New Zealand, mate. I don't want to really be short New Zealand. And the Euro long, yes, potentially, but I don't like New Zealand short. It's not my preferred. So let's see, Euro New Zealand. Accumulation, reaccumulation. What did they do with the liquidity? They bought it. They're on the way to the role reversal. Yeah, similar picture. Potential that it's a break, hook, and go, and they're going to squeeze into this. But again, I don't want to necessarily be short New Zealand dollar. Pound.
And I'm the bad guy who just have to remember to the time. So you have a couple of minutes, but please.
All right. I just wanted to see what the guys are up to. I like it. Okay. My potential trade is I want to short pound versus Canadian dollar. Why? Pound, Brexit, weaker economic numbers expected for this week. Canadian dollar, oil may see a bounce, slightly better economic numbers expected later towards the week. Now, Freddie is correct. If they reestablish shorts in the oil contract this week, that trade's going to go to hell. Not possible to trade it then. So the risk of the trade is Brexit headlines, obviously, and or weaker than expected oil, or weaker than expected Canadian numbers, because they're expected to come in better than last time. So this is where I'm looking, the gray area, to short. If I get overrun, I'm dead. Red line is where I'm dead. If you want to be very conservative, you're going to look at the top edge, 172.80 area, and see if you short there, okay? But I needed to make a decision, and then I'm expecting it to come off again. That's it, guys. Hopefully, it's high risk, yeah? High risk. If you want to be conservative, go higher, but this is where I'm looking to short. I hope that you guys have a great week and profitable trades. And Jens, sorry for the time, and thank you for the opportunity to work with the traders. Have a great week, guys. Thanks for coming in, and see you now all next Monday. No, next Monday I'm not in. Jens, next Monday I'm teaching. Yeah. Sorry, the week after. Thank you, guys. Thank you.
Thank you, Jay. Great webinar. Tomorrow is another day, 5 days a week, 5 different traders.